Hey, welcome to the Leverage Living Podcast, where we live every night like it's a Friday and every morning like it's a Monday. How you doing today, Ryan?
I'm doing pretty well. How about yourself, Bryce?
Doing well, doing well. What are you drinking today?
So, got a cold one in front of me on this nice fall day. It's
I
the
like it.
Schwammy, Schlappy, Schwantoberfest.
Swinson Swanson?
Samsonite.
That was way off.
So yeah, it's written right on the can.
Nice. Take a little sip. Let's see what the review is.
Flavor profile?
I do.
Well, it tastes like a family tradition. I would say
I like the sound of it.
rich, toasty malts with some crisp hop bitterness.
Ooh.
Give me 1 second here. Kind of a floral hop aroma of tangerines and orange blossom. So
Yum.
the palate's on fire right now.
Is it an IPA?
It is not an IPA. This is actually a Bavarian style beer. So it's probably something you're familiar with as a lager.
Fair enough. It seems like it's very fitting for the fall kind of cabin style you're at right now.
Yeah. So I think these are called the Minnesota room. It's a default in a Minnesota home. Yeah, it's the log cabin. It's the tree exposure without the remoteness, of a wilderness retreat. So it's really
three-season.
It's a nice 3-seasoner. It gives me a really good, relaxing vibe after a red day on Friday.
I appreciate it. And it's passing it on to me as well. It's
so
looking like it's pretty comfortable.
What are you wetting your palate with tonight, Bryce?
Ooh, for myself here, Jim Beam Red Stag, a family favorite. So Red Stag by Jim Beam, of course, wildly delicious. Combination of black cherry liqueur with some Kentucky straight bourbon. Our pioneers, they loved it for its balanced, soft, dark whiskey and cherry aromas.
Yeah.
It's traditional. It's backed by the bourbon oakiness, but through it all, it's never lost its wild and inventive roots.
Does it put a little hair on the chest every time you take a sip?
No.
little more carpet on the floor.
Oh yeah, it's there. Just put it right on the rocks. Also, I just read that right off the website. I don't know if you can tell.
Well, sometimes the website can do a little nicer job than you can, but as you refine your palate, those words come to you the minute it hits the tongue.
The second it touches the tip of the tongue.
Synesthesia, is that what it's called? Where when you hear music, you see colors? You familiar with that? Yeah. I mean, if you get good enough at drinking, it can evolve into a palate connection.
I can't wait till can I pull that off?
Should I get us started with a little recap of what we saw last week?
I would love that.
Okay. So overall, despite Friday being a red day, the major indexes were up 1% to 2% depending on the index. So that was the first time, I think in the past 4 weeks, that it didn't finish as a broad decline. So the S&P was down on Friday about 6% from the high it set in early September, which is actually a record high. Didn't think I'd be saying that in the year we've had.
Yeah, for sure.
And NASDAQ, the more of a tech-weighted index, is down 8%. Dow is down 4% from that September high. So last month, it's last month now. We're in October. It's trick or treat season.
All time, baby.
Last month, we're going to coin it the September setback. That was about a 4% drop. So the one place you didn't want to be last month was energy. The energy sector was down over 14% last month. So it's good for the consumer at the gas pump, but for the guys on the rigs, was not a good month.
For sure.
You want to take us through the jobs, the employment scenario?
So, although the U.S. economy added 661,000 jobs in September. The latest report came out and it showed evidence of a slowdown in the pace of the recovery, the September setback. And of the 22 million jobs that were lost in March and April, about half have been recovered only. So we're still looking at quite a bit of a decline there. So we'll see what happens in the coming months. But and then as far as the pandemic relief, I don't think we're allowed to say the C word on YouTube.
No.
So the U.S. House of Representatives on Thursday, they passed a Democratic bill by a very narrow margin that proposed the 2.2 million or trillion with a T pandemic relief package. However, the bill failed to win backing the House Republicans. So the prospects of the Republican-led Senate remain pretty uncertain at this time. So maybe next week we'll see if something gets pushed through.
Yeah.
But with Trumper getting the old C word, I don't know.
Yeah.
I don't know who's gonna take over, and
it adds another element. One thing I was going to say about that, is I think I don't know if commending politicians is the right word necessarily, but with what the speed at which politics and the Fed got involved in March, that was unprecedented how fast they interluded into this and gave the market some confidence and support. But now it's getting more noise is getting involved in party lines, and it's just putting politics in front of the country and their financial future, unfortunately. And I think it's both sides that are doing that. So
last week you called it a sugar rush that happened in March, and now we're seeing a little insulin spike.
Yep, we are.
That blood glucose level is going down fast.
Yeah, it's wearing off.
So if something gets passed again and we get another little injection, who knows? You know? So
it would certainly be.
Yeah, for us SPAC investors, it was a little rough of a week, not kind of what we expected with the mergers that went through. But we'll keep playing it by ear, and we know what we hold. We talked about it last week, and we had Velodyne LiDAR that merged and Helion merged on Thursday or Friday. Is that just yesterday?
Friday. Velodyne was a little earlier in the week.
Yeah. So Velodyne, a lot of people sold that one, but I think, did you hold yours? We haven't talked about this yet, I don't think.
No, I actually got out of that one back when it was still graph. So.
Oh, okay. Gotcha. Yep. So I'm still holding on to that one, and I'm gonna have to hold on for the long haul now.
Yeah.
see how she comes back, but
we can always average down.
With the rumors that it's gonna be being put in with Apple autonomous driving cars, I'm more than happy to see where that goes and see if the rumors hold true. So anything else that we want to talk about for the recap on your end?
I think it's important to touch on unfortunately the president came down with COVID. Unfortunate for a number of reasons. Primary one, you'd never want to see anyone get sick, especially the leader of our country. Whether you enjoy what he has to say or not, it's just not good. And uncertainty is never good for the market. So we saw a little reverberation on Friday. However, it did bounce from the lows. And we've seen through the weekend now, even today, which I think is great news. He obviously is getting the best care there is. So he seems to be, I think his doctor said he's feeling better as of today. Another headline from last week that's important, especially if you're a SPAC investor, not SPAC. That was probably the most active response our little has gotten. Where
I'm so glad it was too.
I even ran into someone this weekend who had watched it. He's like, by the way, I think it's SPAC, and I'm like, I kind of thought back on it. I'm like, why did I ever call it SPAC? I don't know. Maybe I just like to be unique or wrong. But
a little bit of both.
Yeah, a little bit of both. Trump-related SPAC headline. He was looking at an automobile at the White House last week. Who's the manufacturer? Tell us a little bit about that.
So the vehicle that visited him at the White House this week was the Lordstown Motors new fleet truck, the Endurance is what they're calling it. That's a SPAC, Diamond Peak Holdings Corporation.
DPHC.
DPHC. They're merging with Lordstown Motors, and that one's coming up quick. They announced that they're going to merge back in October, probably in early August. They announced that, so that one's kind of moving along faster than all the other ones have been. So looking forward to that one. And then, I mean, I'm sure you saw the debate, or at least highlights somewhere. Highlights, low light.
Yeah.
I don't know what you're gonna call it, but Trump was talking about EVs and how he's very pro EV. So I
think Biden actually spoke about charging stations too. So
he did.
It was a good childish argument that covered on the electric vehicle space, not only the vehicles but the charging stations as well. So, hopefully this is kind of immune or supported, I guess you could say, by either administration. It seems like
we'll call it a cooperative catalyst, perhaps.
Cooperative. Yeah, we got to coin that. I think I'll talk to our video editor and see if we can get that to pop up on the screen.
Yeah, I think we can handle that.
Okay. Speaking more about EVs, Tesla shot some information out on deliveries. They
did. They delivered an impressive 139,300 vehicles last quarter. And they have a gigafactory in China now. Is that right?
Oh, yeah. I think I did read a headline on that.
Yeah. So they put out almost 140,000 vehicles last quarter. That topped the expectations by a lot.
Yeah.
Elon Musk has been pretty active. He's thrown out new tech, and then we saw Battery Day a couple weeks back. He's going to start selling cars for $25K.
Yeah, so that's huge. That's entry level.
For a computer on wheels, that's a pretty good price point.
with Tesla, it's kind of funny. Like the most minute positive news. I mean, this stock will probably just go to the moon. I personally don't own any. Do you have any, Bryce?
I don't. But it's like a cult, I would say.
Yep.
The Tesla following, and I wouldn't mind being a part of it someday. It's just it's been frothy.
I have a new term for the Tesla followers.
Okay.
Just came to me with my Bavarian style ale.
Can't wait.
Musketeers.
Did you actually just come up with that?
Seriously,
Oh, dude.
I mean,
can we trademark that too? That's got me crying. My eyes are watering for that one.
That could be the Red Stag. That might be a merch drop.
Oh yeah, we have a store. That's a real thing. I think we should put that on there.
Yeah, we'll throw it up. Still a little more tweaking to do, but if you want to support the podcast, we'll have the link in the description, and we have some good leverage living merch you can pick up.
I noticed the currency was in a random icon. I don't know. It was a T with two lines through it.
I've never seen that before, but the gentleman whose services we have elicited for this website, he's in a different country, so maybe that's the home country. I don't know.
So if you go on there and see 47,000 whatever for
just pay dollars
T-shirt or a hat. We'll have to, we'll get that figured out at some point.
Why don't you tell us about? Oh, go ahead.
Airbnb. That was another thing I wanted to touch on. Is that what you're gonna say?
Yeah, I was gonna say, tell us about Brian Chesky.
So Airbnb is aiming to go through an IPO. We're kind of talking about it, touching a SPAC, maybe going through Bill Spackman.
Yep, Bill brought it up.
Yeah, it sounds like they're aiming to raise $3 billion for an IPO that could come in December, and that's according to Reuters. So that's pretty good quality source there. I think. I think the SPAC talk is out for that one.
Yeah, I don't think it doesn't seem it's going to go the SPAC route, but there was IPO paperwork filed a little while ago. So I'm hoping, I think we'll see that one before the end of the year. Depending on the opening price, that's always kind of a gamble, but it's a company that I personally really like a lot. So I'm excited for that IPO for sure.
I do too, and especially if it comes out in December, it might not get the sudden hype that you might expect with the pandemic going on. People aren't traveling, so if you get in early,
it could be a good time.
long term, people start traveling again. The vaccine comes out, hopefully in mass quantities at the end of Q1, which they've said. Maybe we can ride it to the moon.
Could be a one-way
You may
ticket.
or may not have. You may or may not appear to hear first. So,
speaking about new listings, there is a new ETF that's going to hit the market. A couple of our episodes, we've talked a lot about SPACs, not SPACs, but SPACs. And
big fan.
It's going to come out, I think Thursday, but it's going to be SPAK. It's going to be a SPAC IPO. So it's going to track shares of companies that are listed on exchanges that became listed by merging with a special purpose acquisition company, rather than those that came public through a traditional IPO. And it's also going to track SPACs that have not yet executed on an acquisition. So as you could tell, if you've listened to our prior episodes and potentially this one, we cover SPACs a fair bit, and it's a lot of research. It's a lot to keep up with. And it's a sector of the market or an area of investment opportunity where the information maybe isn't as readily available or consumed by the general public. So there's been great upside opportunities if you keep up to date on some of this information. So if you don't want to do that kind of homework, this could be a set it and forget it way to get some exposure to SPACs, and not have to read through SEC filings and whatever else we have to do. So.
Yeah. So you touched on it really well. It does take a lot of research, and we kind of throw ideas back and forth. When we're looking at SPACs, we look at the management teams.
Yeah.
We know who we like to follow, and the smart money, we like to get in with them. We talk about CP a lot, Shamat. So with this SPAC ETF, SPAK, what are your thoughts? Because we do a lot of due diligence on the SPACs themselves, so we know which ones we like, and if we have certain conviction or a lot of conviction, we can just put it right into that very SPAC instead of throwing it into the whole broad market. But like you said, the research portion is it takes quite a bit of time, and I usually put in 1 to 2 hours a night just going through and see what happened and what's new and the new management groups. So if you want to throw this SPAC in there, your returns might be okay, but they may not, if you actually do the research and go into ones that you have great conviction on, you might have better off play. But
I would rather just take more concentrated positions in companies that I think have a really great future. And I'm talking companies and management team, not just tickers that get hyped on Twitter or whatever, because as is any industry, there's people who are seeing this as an opportunity to potentially exploit investors and raise a lot of capital. So I just don't think you want to have a peanut butter approach and take a piece of everything. I think you want to be concentrated with the ones you have conviction on.
You say a peanut butter approach?
Yeah, you spread it out.
I was like, you mean cookie cutter or peanut butter?
Gosh, Bryce, I'm teaching you a lot today.
That's a good one. Okay, you spread it out. That's fair.
Yeah.
But yeah, that's why you got to listen to this podcast, because we'll tell you the ones that we found out that we like. And if you're a long-term holder, get those diamond hands, strong hands, hold for a long time. Unless you find something else you need to leverage money in a different fashion, feel free to sell, put it in there. It's all about addition by subtraction sometimes.
Absolutely.
So anything else? Let's talk about earnings in October. Is there anything key that we're looking at?
It's kind of our start of earnings season again. So I'll talk about, there's the most significant play, I think, that's coming up this week is Domino's. We'll touch on that a little bit more later in the episode, but I think about October 13th-ish, around middle of the month, we're going to start seeing a lot of earnings hit the calendar and ones that we might want to trade or purchase leading up to the earnings date. So we'll talk quite a bit more. We'll do a little bit deeper dive on those for the next episode, because those will be coming up pretty quickly.
Okay. So, and I'm looking at it right now. I just want to throw some names out there that we're seeing. We're seeing Netflix, Verizon, Chipotle is huge, Wells Fargo, Citibank, AT&T, 3M, Procter & Gamble, a ton of big ones, Pfizer. So
bring your
yeah,
candy bucket out. It's going to be trick or treat time for earnings season.
Yep. Can't wait for that.
I want to touch on, if you don't, do you have anything else for the recap?
No, that's fine. I know you wanted to talk about real estate. I'm sure that's what you were just about to say.
Yeah.
Go for it.
Yeah, so I want to talk about real estate a little bit. It's definitely going to be a part of this podcast because we're trying to cover all different investing capacities. So one quote that I think is relevant to this current economic situation is, history doesn't repeat itself, but it rhymes. And the reason I bring that up, I was not an active investor, not very involved, and I know you weren't either back in the 2008, 2009 recession. But I think, sometimes it can be natural to try and go look back at that time period and say, hey, what happened? What are the opportunities? So this is one of those cases where that scenario is not being repeated in this economic recession. You look at Lennar Home Builders, which is probably the biggest home builder in the United States, publicly traded. Their stock has been on fire this year. And that's something I don't think anyone would have thought to be the case. If you would ask somebody in March when markets are dropping, say, hey, would you be interested in buying a bunch of Lennar, the home builders? That just mentally from 2008, 2009, you say, that is not where you want to put your money. So
and we've seen Lowe's, the stock at Lowe's has been up, Home Depot's been up.
Yeah.
So it's kind of just like people are at home and they're quarantining and they're just leveraging their time to put some more effort into their home and increase that equity. And I don't know a lot about real estate investing, so I'm learning right along with the viewers here because Ryan he's been around the block, so to speak.
I've entered the neighborhood. I don't know if I've been around the block yet, but the car's in the neighborhood.
That's fair enough.
But I want to talk a little bit because I've been trying to pick up more real estate. My goal for the past several years is I try to acquire at least one property a year. And I've definitely been on that trajectory. It's kind of been more for the past couple of years, but I'm closing on a rental purchase in December of this year. So that'll be my only single family so far this year. But 2 weeks ago, myself and another individual, we made, I didn't see the place, but it was an investment opportunity of 2 houses in Minneapolis that were rental properties. So my friend in Minneapolis sent me a link and he said, what do you think about picking these up for rentals? And I said, yeah, make a full price offer. I knew that's what it was going to take in this type of market. And I think these have been listed, this was maybe day 4. So he actually went the next day right away in the morning, did a walkthrough, put our full price offer in, and we could do a 2-week closing if we had to. So we're competitive on the offer side. And by the 4th day, there was already an offer accepted on this place that was just listed. And that's the type of environment we're in. So
it wasn't your offer?
No, we have a backup offer that's in, but I'm guessing it's not going to get a sniff. So
motivated sellers.
Well, I think there's a lot of motivated buyers that there are probably there's probably 3 or 4 full price offers the first day. I mean, that's the environment we're in. And my other friend,
motivate me to sell.
Oh, absolutely. My other friend in Montana sent me a property, said, what do you think of this? And I was like, well, yeah, should we try to throw an offer in? He's like, this is going to go full price within 2 to 3 days. And it's not because it's incredibly competitively priced. This is the nature of the demand in the market. The city I live in, the homes listed for sale, the inventory is down 39% from last year. So you have a tremendous amount of demand and a compressed supply that are really pumping up the real estate values. And my thought is to the millennials, the Gen Zs, I think there was a question mark on, do they want to be homeowners or do they like the rental, living in the apartments downtown? So what I think this was a catalyst for is a push for more suburban housing. People are starting to see their home as the office, the gym, the place to relax. So it's becoming more than just a place to sleep. And there's been a little bit of an outflow from some of those downtown. So I want to ask you, Bryce, how old are you?
26. Freshly 26.
26. Bryce is in chiropractic school. He's, got a really, he's going to have a really exciting future in the years to come as he graduates and gets into a practice. So how high is it on your priority list? Are you looking to own a home? Is that something you want to
do? That's a good question. And that's something I've thought like a lot about at this point. Yeah. Just trying to get through and find somewhere, find a location, first of all, to start practicing. And I think I do want to stay in the Minneapolis-St. Paul area where I am now. So, I mean, the first couple of years I can see myself renting. That's what I'm doing now, obviously.
Yep.
But once you get a family started, that makes it more, you want to have that picket fence, situation a little bit more than what I would want right now. That's too much right now for me. So in the future, yes, I definitely would want to own a home. I do believe.
That's one thing I think was interesting about what you said is the picket fence ideology. And that's something that, we've all been kind of aware of is, but I think it's perpetuated more in the age of social media where, what do you see on your friends' social media profiles? They get the boyfriend or the girlfriend, they get engaged, the wedding pictures, the first home, the baby's room's repainted, it's baby blue. The dog, hopefully a Cavapoo. But so I think it gets that thought of this is what life is.
The American dream.
The American dream. I think it's perpetuated more on social media, and people's expectations of what they should do themselves are kind of set by those social media posts. That's my own personal thought.
That makes sense, though.
Yeah, I don't think it always makes sense in every scenario, but I think as humans, sometimes people they want something to follow, and that's kind of the path that's perpetuated on social media. It's like, hey, I don't even need to think what I should do next. This is what all my friends are doing, right? I see every picture.
It's a step by step kind of situation. You're exactly right about that, for sure.
So I think you're going to keep seeing that trend continue for sure. So it's a good opportunity to be a homeowner. I don't think there's going to be a tremendous drop in real estate values. The only thing I think could lead to that would be a disruptive technology that completely replaced the way we build and substantially lowered cost. But in the way we're doing it now, I don't think you're going to see that. So I think it's here to stay, and it's good for investors too, and maybe even appealing to look more at. So I have mainly multifamily properties now, but it might be more appealing to look at some of those single family as well, because there is a desire to have that space, and I think it's increased now with the pandemic. Just to talk about some numbers too, and this is stuff that I think should be kind of surprising for listeners to hear. So there's an index of pending home sales that was up almost 9% in August from the prior month, and it hit a new all-time high. So it's the fourth consecutive month that you saw Americans signing contracts to purchase homes, and that index has risen. So the pending home sales is up over 24% from the prior year in the midst of a pandemic and an election year, and social.
That's so crazy.
Social instability, political instability. I mean, you got every layer there is. And people are buying homes, and we talked about
it's crazy times. It's I don't get it. Love it.
So you have that happening. So I think we captured a lot of who I'd call a marginal home buyer. I think we captured a lot of those with the rates going down, but you still have 8%, whatever you said earlier, unemployment that they probably aren't buying homes right now, but that's a base that's going to buy a home when the economy returns. So I don't think you see this going away in the near term. And that's
but when the economy returns, won't the mortgage rates go back up again?
I think the rates will tick up a bit, but I don't think I don't think in the next 5 years you're going to see something north of probably 4.25 for a 30-year. That would be, to me, the upper limit.
Okay.
The Fed stated they're going to leave the Fed funds rate, the borrowing rate at 0 for the next 3 years. So unless we see a big surge in inflation, I don't think there's going to be a large upward pressure on rates. There will certainly be some, but gosh, if you get a 30-year mortgage at 4%, historically, that's a great rate. So of
That's
course,
news to me. I didn't know they're going to keep it that low for 3 years. That's awesome.
Yeah, so there's not a lot of upward pressure on rates, and I could go into a whole other conversation on that because I think that the rate scheme is not, it's tied to currency and it's not just a domestic thing. So it's a global marketplace for rates, and you're seeing them drop kind of everywhere and go negative in some cases. So that could be a whole other episode of, do we go negative? But
that would be something. Has that ever happened before?
Yeah, several other countries have negative rates. So I believe Japan is one of them, actually.
Okay, so walk me through what that exactly means. So you take out a loan, and the bank pays you to take out a loan?
So
is that
the one thing would be you would pay the bank to keep your money there.
Okay.
So the purpose of it, obviously, is to influence consumers and individuals not to keep money, get rid of it because it's costing you to keep it. So technically it's supporting consumerism. However, what's this long term? What's the success of that over the long term? So like I said, we should touch on that in another episode. I see it has you interested. So
I'll quit asking questions. We can move on if you want.
But I have a good friend who's got some great economic data on that. So I'll talk to him about being a guest, and I think that'd be a fun episode to cover because it was really cool to me to see, that was a concept that's new to you. And I think that reinforces what's neat about our dynamic is we have different levels of experience here and expertise. So that's cool because it's not something that would have, I guess, came to me.
I feel like I can ask the questions out of my own curiosity that a lot of viewers might have for somebody with the experience that you have.
Yeah, and it's a primary purpose for our platform. So
bingo.
Question.
Yeah, if you couldn't tell, my ears were perked by that. That's very interesting.
Yeah, but so in conclusion, I think real estate's going to be a good place to be. I'm still looking for properties to buy, so if you know of any, send them to the podcast. We need a leverage living hype house.
We can make all our TikToks there.
Yeah. So Bryce, tell us what happened in the SPAC market last week. Give us a broad SPAC update.
So last week it wasn't good, obviously. This week we kind of touched on it again prior. We had the Velodyne LiDAR fully merged with Graph.
Yep. Went
down almost 17%, which I think a lot of people with SPACs are waiting for that merger to happen. They want to see that ticker symbol change, and then they think because of what happened with Nikola, touch on it again, it zoomed all the way to 90 plus.
Yeah.
So I think they expected that to occur again. Didn't, obviously. A lot of people sold out, and she went down a lot right away. It never jumped up.
And with
didn't have that jump.
So in SPACs, there's a group called pipeline investors, and they have a lot of money put in. Typically, there's a lockup period for the pipeline investors to not be able to sell their shares. Maybe it's 18 months or something. Well, that lockup period didn't exist for Velodyne, so that's partially why you saw a lot of that selling pressure.
Yeah. And then we had Helion. They completed their merge with the Tortoise Acquisition Company.
Yep.
That one, I think we're going to talk about our worst trades and our best trades of the week, maybe.
Yep. That'll be in one of those categories for me.
And likewise for me, and on the opposite end, which is kind of funny talking about that last week.
Yeah.
We're having quite the conversations back and forth about the Helion merger. Some pros and cons, mostly cons. And so I think next week, in my personal opinion, of course, I'm not a financial advisor.
Neither of
But
us
I think that company will continue to rise after its fall through the merger. Sure. Just my personal opinion, and I'm gonna sell puts on it, and I'm gonna keep selling puts on it. So, and then TRNE. I was gonna ask you about this in the midst of the real estate conversation. Do you ever think that houses will be like 3D printed? Have you seen that technology?
There is a machine that builds them out of concrete, so to speak. I've seen that. So, but I think that's touching on what I think could be the biggest disruptor would be the technology.
Because I heard you mention the technology and a disruptor company in the housing market, and I think we've seen that a little bit with like Zillow and the real estate like purchasing and Open Door.
Yeah.
Again, in the purchasing market, but as far as the manufacturing, something like that could be a huge disruptor. And TRNE is another 3D printing company. I know you like it a lot. I like it a lot. CP likes it a lot, which makes me like it even more. They're the 3D printing company. Have we heard a date on that merger yet?
I think it's supposed to be in Q4. So before the end of the year, off the top of my head, that's what's coming up.
Okay.
I might be wrong.
That'll be a good one to look into more. And we'll touch on it again when it gets
we'll touch
closer.
on it a little later in the episode too.
Okay, perfect. And then let's see, some trades last week. QQQ, that's the power shares of the NASDAQ. That was down 1%. And then SBE merging with ChargePoint, that was down about 0.8%, so nothing huge. And then Pershing Square, the $4 billion SPAC with Billy Spackman, William the SPAC man. That was actually up 1%. It hasn't been moving much. There hasn't been any catalysts for that one. So, we'll see, and we'll keep throwing that name out there, getting you aware of it, because it's going to be whatever he picks. He's looking for a unicorn, $1 billion plus. It's going to be big.
Yeah.
And I know you like that one, so we'll keep touching on it. Should we go into our best and worst trades of the week? We touched on Helion a little bit. I sold a put for 39. The strike price is at 39, and we can do another episode on selling options. Selling and purchasing, mostly selling. That's what we do. We take that premium and we run with it. So I sold a put at the 39 strike for Friday, October 2nd, and it ended at 39.50. And I thought I wasn't even going to be close. I thought I was like way safe going that low. So I'm curious. What did you think about that? I mean, we had a buddy.
I sold a $45 put on Helion, and I think I sold 5 shares worth. I was going to net over 900 in premium if
5 contracts.
Up to 5. Yep, 5 contracts. So I was going to net 500 or 900 plus in premium, and Friday was doomsday. That turned into a loser.
Do you plan on holding? Because
it expired.
I know, but you have the shares now, correct?
No, they actually just they
didn't get exercised.
Yeah. So.
Oh, okay. Right on. Okay, that was fun for some of us. What about Peloton? We had Peloton on there. We made a couple trades on that one. What do you think about Peloton?
Yeah, it had a great week last week, and that was so I sold the puts on Helion on Monday, and I also sold I think 5 puts on Peloton on Monday as well, and that stock did really well through the week. So I collected I think it's about 600 in premium I took from that one. So it was a good week on that one.
Add some shekels to the pile.
Yeah, exactly.
I think we should do an episode all on the options.
Yeah, I'm talking
do a deep dive on that.
I'm talking to someone who I think would be a really good guest for us to have on. We definitely want to get to the point where we're doing some guest appearances on the content, and so this individual is really good with options. So I think it'd be a fun discussion.
That would be fun. Fun. And like like we all know, I'm pretty new to it, so any extra information is
Yeah.
well welcomed.
For sure.
Okay. Oh, one other thing I want to talk about. Playboy. Playboy's coming out with they're emerging with a SPAC. I'm not gonna buy it because it's a magazine, obviously. And do they do anything else? Do they have a?
Yeah, I was gonna say, what is it now? I mean, it was one of the most iconic brands, and
of course everybody knows it for sure.
Everybody knows it. So tremendous brand value, but at one point they stopped featuring any nudity, and that was what I thought was the pillar of the brand, partially.
And then Hugh Hefner unfortunately passed.
Yeah.
So yeah, I'm not sure exactly what the
I don't know what they do.
What the plan behind it is, but Mountain Crest Acquisition Corp.
Yeah.
Is merging with Playboy. So I don't know I don't know the management team behind that. I just saw that on Twitter that was official, and they're gonna merge. So I started to throw it out there. I'm not buying it, but
no,
just throwing it out there.
If you have,
there's more of a fun fact.
Yeah, if you have an affinity for the content they're writing, which I guess is about all they have now, then you can buy. But I won't be participating in that one either.
Yeah, neither will I. And then FMCI has an upcoming merger. We had a little flash sale on that one last week, down 11%, 11.5%.
Yeah, I remember. So we talked on our last episode, and I had a strong conviction. I think you did too. After they got their extension vote passed, so we said Monday's going to be a hot day. And Monday, I think it finished up over 13%. And I took advantage of selling calls on Monday. So I sold some, I think a $35 strike, but it gave me a pretty good, I sold at least 400 shares worth, or 4 contracts. So I received some good premium on that, and that's been nice for a hedge for some of the drawdown. And that's, once again, we're talking about this several times, but talking about selling options, I think will be a great episode, because it's an opportunity to get paid to wait for an entry point, I'd like to say, on selling puts, and to do some hedging for stocks that have some big run-ups as they get a little too heated, maybe.
Definitely. I did that 35 on Monday as well. We talked about it Monday morning, and it's like we saw FMCI just take off. So you're like, okay, good opportunity, get in. I only have 100 shares of it at the moment. I know you had more. I think you said 400 or 4 contracts.
I just sold it on 400 because that's what I had in one of my portfolios that I have the options capability. But I have, I probably have close to 2,000 shares of FMCI, which, we got in around 14-ish, I think, on that one.
Oh, yeah. Like right away, pretty much.
14 and 17, I think, might be my cost basis. So it's been a good run.
Yep. And I think that'll be a good one.
Yeah, I think it's a good long-term one. And we highlighted some of the financial benefits or financial metrics of it on last week's episode. So I think that
go back and listen if you haven't yet.
Yeah, go back and listen to all of them. I also spoke last week about Oak Tree acquisition. So that was the one I said was going to merge or announce a definitive agreement with HIMS, which is a company that, Bryce, you made a good point. They do so much marketing. I mean, everyone's seen them. But it's called a telemedicine company. They do kind of direct mail for some certain medicines, and they're expanding. So that was officially announced this last week, like we said it was going to be. However, that rumor was likely priced into the stock a little bit, and with the broad weakness in SPACs, it ended up going down the day after the rumor. So I still hold some of that.
Did you say SPACs?
Dang it! I knew you were gonna.
I knew I'd catch you.
Is that all you've been listening for this whole episode?
Yep, ears perked again.
I don't need any help looking stupid, Bryce. Yeah, I
tune everything out. I don't know. I honestly don't know, but it's fine. It's fine. You're talking about HIMS, yes, pills, ED, hair loss.
Yeah. Once again, portfolio could have used some of HIMS treatment at the end of last week. I wanted to wrap up on SPACs, at least just talk. We touched on last week about how the SPAC market has been growing, and there's currently 138 SPACs that are searching for a company to merge with, and they hold over 47 billion in capital ready to deploy to merge. So they would have to find, I mean, yeah, it's, and they don't, when a company merges with a SPAC, so if a SPAC, we have $1 billion SPAC, it doesn't mean that we're going to just merge with $1 billion company. We might merge with a $5 billion company. So if you looked on averages from what we've seen so far, there'd be the potential for 138 companies for over 160 billion in enterprise value to be merged with. So the SPAC market's just going crazy, and it's tough to stay on top of.
Yeah. So, I mean, if you don't want to get into that, SPAK. If you don't want to do the research and look up different SPAC opportunities, this isn't the only thing we do, but we do like, there's a Reddit feed. It's just called r-SPAC.
Yeah.
There's a lot of conversation that goes on in that, and a lot of people throw out their due diligence. So it's kind of just an all-in-one space to read the latest news. And I know we both check that at least once a day and see what the what news is coming out about each SPAC, and see what we can see, what opportunities we like. And
it's a great resource. Just like, you know, I hope our listeners consider this podcast to be a resource. So that's part of becoming, you know, a great well-informed investor, is using, you know, Reddit's a phenomenal resource for SPACs and investing in general. So let me start us off with, we talked a little bit about, did we talk about our best trade from last week?
I did.
Yes. Okay.
Let's hear
so
yours.
it's my opportunity to highlight my worst, and I got to talk about that and Peloton.
Let's hear your best. You can what was Peloton the best? I mean, Peloton, you had good luck.
Yeah, for my for selling a put, Peloton was my best for last week. In terms of a stock, I have holding, or I purchased some more of a holding I've had for a while called Digital Turbine, ticker APPF. That one's just been crazy. So
going to the moon.
It's already maybe mesosphere in terms of journey. So that one's been going really well. But yeah, that was probably my best stock trade of the week, is buying more of that early on. So,
and you've held that one for years now. So
yeah,
I'm proud of you for
years. We actually have had myself and some others, we have kind of a pick one stock for the year competition, and that was the one I chose. And I bought a lot more when I picked it. And I think my cost of base is about $6, and yeah, it's north of 30 now. So that's been a good ride. Okay, and we're gonna find more of those for our listeners.
Absolutely, we're on the prowl every day.
Yeah, and of course other than Shill, which you mentioned, I've never had another loser. So, you know, I just don't know.
Never ever.
No, never. Oh, not one that you'll hear about, at least. That's the point of doing a podcast, right? You get to hand pick the info.
That's why I tried to call you out a little bit.
Someone's got to keep me honest.
Yeah.
Let's talk about what we got for the week ahead. I have a couple. Why don't you get us started?
So we talked about TRNE for the week ahead. I think that one's gonna be nice. We dove into that pretty well. We have Domino's earnings on Thursday.
Yep.
A lot of people ordering pizza. You can't beat a good Domino's DoorDashed or Instacarted to your house, or Instacart? No, what's the other one? DoorDash, Uber Eats.
There's quite a few now, but Domino's themselves has a good delivery service. So
exactly. Yeah. So I think that'll be a good one. People staying in, not wanting to go out into public places, weddings, or out to sushi bars, anything like that.
Yeah.
So, let's see. Are there anything else in the week ahead? As far as earnings goes, that's
for trades. So Domino's, I think, will be a good one for earnings. There's an ETF that I picked up last week. It's a longer term play, so it's not a short term trade, but the ticker is MORT, and it holds, it seems like primarily mortgage REITs So they engage in the buying and selling of mortgages, but the compilation of companies that are in this ETF are trading at a discount quite a bit to their net asset value. So I think it's a good valuation play, and it pays like over an 11% yield. So you do get paid to wait. In addition to that, I do like is it Trine? Is that how you pronounce it? TRNE?
Trine. If you wanna pronounce the ticker symbol, you sure can. But yeah, TRNE.
I don't need another argument with how I pronounce things. But that's another one. Trine Acquisition. Trine Acquisition. That's another one merging with Desktop Metal that I think is at a great valuation. It's suffered like some of the other SPACs on the broader weakness, but it's got a lot of 85% institutional ownership, and it's a great 3D printing, disruptor. So I have a lot of faith on that one too.
It was down 2% last week. It opened at $10 and it's at $10.93 now with a merger upcoming. So, it high pointed. Let's see, I'm looking at the chart right now. It high pointed at 1250 on September 11th, actually. That was just on the news of it acquiring that company as its merging entity. So once it gets closer, we expect that to rise as well. That's a good call. Right, yeah, just so to touch on TRNE again on the Desktop Metal, those are 100 times the speed of the legacy printers that we're familiar with. They have 120 patents pending, founded by MIT professors, so it's going to be good.
Absolutely.
Them boys and girls over there are smart. And then they have distribution
It's no UND. We have to throw that in there. There it is. Midwest Harvard.
Represent Midwest Harvard. And then and they have distribution in 60 plus countries. So it's being passed along, and it's very good tech. They have investments by Ford and BMW. So you have to think that they'll be in the EV market at some point as well.
It definitely could be for parts, probably be a
that's true. I'm stupid. No.
I don't know that it's going to print a car.
Everything is EV.
But I mean, they're printing houses, so maybe.
So let us know, guys. We'll wrap it up there. I think we've been going for quite a while. Yeah. Send us a topic you think we should cover next week. What's our website? leveragelivingpodcast@gmail.com.
Yeah,
send us an email. Toss a comment down below. Like, subscribe, share this video. Anything else you want to touch on before we call her a day?
How many times did you record that red stag? Yeah, we need one more cheers.
Not enough, my man.
Have a great week. Thanks for joining us.
Yep. See you later, guys.